Well, once you create a system of value, you create further network effects. So people can be in Minecraft, earn actual money. In a world of AI where we don't know where our jobs are going to lie, you have plenty of opportunities to do this. That's the rise of social tokens. Can you be paid as a sports fan to be a super fan? What does that mean? What does that mean for the music industry? Does it create new opportunities for us as humanity to create purpose, meaning, and assets? Yeah. So that's the scale of this thing. It's like, yeah, the financial system is an easy story to tell, but it's actually the future of humanity's operation, the coordination layer of humanity on the internet.
Bitcoin has dropped more than 11% in a matter of days, briefly falling below $95,000 to a 6-month low as a brutal sell-off in tech and AI stocks, especially semiconductors and high-growth names, sparked widespread de-risking across all high-beta assets, and the weakness in the Nasdaq spilled directly into crypto and evaporating bullish conviction almost overnight. Persistent outflows from US spot Bitcoin ETFs, a large one-time sale by a whale from 2011, renewed inflation fears sparked by President Trump's tariff announcements intended to combat rising food costs, but alarming economists about recessionary pressure on lower-income households, and a simultaneous surge in the US dollar and bond yields all converged to hammer risk assets in unison. Surprisingly, the derivatives markets remained orderly, with liquidations painful but far smaller than the cascading events seen earlier in 2025, indicating the sell-off was sharp but not yet systemic.
I didn't understand the debasement of currency at that time. We understood something was going on with the central bank balance sheets, that it was driving markets. We didn't really understand any of that. But my thought process was, at the time, Bitcoin was $200. And I said, listen, it's either worth zero or this is the future of the entire financial system and everything will get recorded on blockchain. And then we know who owns what. And that was my simple thesis. And I said, listen, if I just use gold as the basis of understanding, I can impute like a stock to flow, how much gold is above ground versus known supply, reserves of gold, and do the same for Bitcoin. And I got, well, Bitcoin's probably worth $1 million. And that was when gold was like $2,500 or so. And I said, okay, well, let's discount me by 90% because I don't know. So Bitcoin's at least worth $100,000 and it's only $200 now. I said, this is the greatest trade the world has ever seen. And it proved to be so. And it's the same thesis. Is blockchain rails are the future of the financial system. I just didn't realize, because smart contracts weren't around then. But when smart contracts came out, well, it's the future of the internet as well. Bitcoin is one of the elements of crypto. So crypto is the use of blockchain technology at scale for the future of the internet and the financial system. Bitcoin is the collateral layer of the system. And it was I who coined the term pristine collateral back in 2020 to say, here's a collateral that can't be debased, that's globally accessible, that's fractionizable, and is immutable. And therefore, this is a great form of collateral, except its volatility is very high. But over time, as networks adopt, the volatility comes down and it becomes more manageable as collateral. So that's Bitcoin's role in the system. But that's a small part of the overall space. So if we're going to $100 trillion, how big is Bitcoin in that? 20 trillion? 25 trillion? Well, there's 75 trillion of other value. And that's what crypto is. It's the technology part of blockchain. How else can you use blockchain? And it was smart contracts that really changed everything.
Instead of consistent surrender, professional traders are exhibiting a dual personality as Bitcoin dropped below the psychological $100,000 level. Binance whales aggressively accumulated it, while OKX whales took the opposite approach and reduced exposure after key technical support collapsed. Options pricing and open interest show increased caution and wider bid-ask spreads, but no extreme bearish skew or panic level put buying. And funding rates, while negative, have not reached the capitulation extremes seen in previous crashes. All of these factors give the impression that sophisticated players have mostly eliminated over-leveraged longs and are now waiting for clearer macroeconomic signals before committing new capital in either direction.
In the financial markets, everything will go on chain. So all equities will go on chain, quicker settlement. We're seeing money going on chain in terms of stablecoins. We'll see every derivative will end up being an NFT because they're just individualized contracts that can be settled instantaneously. That's what prediction markets are. They're basically derivative markets. So all of this is much more efficient way of ownership, monitoring flows, security, everything. So the financial system will en masse move entirely to this framework. It makes much more sense. So, but that is only part of the equation. The financial system is just some of this. But we've got a world where we're now about to compete with AI in the world that we live in. So we're going to need digital ID. We're going to need proof of who we are. Okay, well, that's an 8 billion person problem to get solved fast. With zero knowledge proof technology and blockchain, we can do that at scale, and we need it. Then we've got the rise of AI agents. And agents are, it's like hiring somebody off Fiverr to build a website for you, do a PowerPoint presentation, all of this stuff. You ask agents to do it, but agents still need to get paid because they cost in terms of compute and electricity. So how do they get paid instantaneously at the speed that AI and the internet operates? The only way is blockchain rails. So it becomes the system by which all value is cleared and stored. We're seeing things like the rise of digital art, NFTs, showing that blockchain can store a single piece of information worth $70 million in the case of a Beeple. So it's very secure. And so what can we do with that? Well, tokenization of logistics chains is another way. The commodity chains, the shipping chains, all of that stuff, because it's a fast way of settling everything and proving who owns what within that chain. And that's just still the start. Think about the gaming market. Billions of people game. They earn assets in the game, but those assets, once you leave that game, have no value. Well, once you create a system of value, you create further network effects. So people can be in Minecraft, earn actual money. In a world of AI where we don't know where our jobs are going to lie, you have plenty of opportunities to do this. That's the rise of social tokens. Can you be paid as a sports fan to be a super fan? What does that mean? What does that mean for the music industry? Does it create new opportunities for us as humanity to create purpose, meaning, and assets? Yeah. So that's the scale of this thing. It's like, yeah, the financial system is an easy story to tell, but it's actually the future of humanity's operation, the coordination layer of humanity on the internet.
Strong. Bullish triggers are subtly aligning beneath the price movement despite the carnage on the surface. The intense selling from ancient 7-year wallets that had spiked to more than double July levels is now clearly exhausting and decelerating rapidly, a pattern that has historically marked the end of corrective phases. And the macro headwinds of a rampant dollar and rising yields need only modest softening, not a complete reversal, to flip from suppressant to catalyst when layered on top of sustained inflows and easing old holder supply pressure. This means that the current mid-$95,000 range, which feels like dying momentum and peak pessimism, is actually setting the stage for the next impulsive leg.